Hi everyone and welcome back to Money Matters. I'm Rob Glenn and today we're diving into the top 10 tips you need to know when you're applying for a loan. Whether it's a secure loan, an unsecured loan, or an overdraft, we've got you covered with everything you need to know to increase your chances of approval. And to get the best terms possible. So let's get right in. First up, don't forget to like and subscribe to the channel. It all helps. The first question you need to ask is, do you really need that loan right now?
Oh my God!
It's potentially a big commitment. Just take a moment and ask yourself, do you need the loan? Okay, done that? Let's go. Tip number 1 is to know your credit score. This is your golden ticket to a loan approval. It's the first thing lenders check to decide if you're a safe bet. A high credit score means lower interest rates and then better loan terms. If your score is low, don't worry, there are steps that you can take to improve it. Pay down debts, make payments on time, and correct any errors on your credit report. Regular monitoring of your credit score can help you track your progress. Tip number 2. Understanding the different types of loans. There are two main types of loans, secured and unsecured. A secured loan requires collateral, like your house, which can lower your interest rate but risks your asset if you can't repay. Unsecured loans don't need collateral but can often come with higher interest rates. Additionally, consider other options like personal lines of credit, overdrafts, which can offer flexibility but may have different terms and fees. Compare interest rates. That's tip number 3. That can make or break a loan deal. Shop around and compare for best rates from lenders, banks, credit unions, and even online lenders. Even a small difference in the rate can save you a lot of money over the lifetime of the loan. Use online tools and calculators to see how different interest rates will impact on your monthly payments and total cost, and total loan cost. Don't just focus on the APR, look at the overall loan terms. Tip number 4, check your debt to income ratio. Lenders want to make sure that you can repay the loan. Your debt to income ratio is a key factor to consider. It's the percentage of your monthly income that goes towards paying debt. A low rate not only helps the loan approval, but it can also secure better terms. Tip number 5, gather documents and be prepared. Having all the necessary documents ready, like proof of income, pay stubs, tax returns, identification and details of your existing debts and assets, being organized can help speed up an application process and makes you look more reliable to lenders. It's also a good idea to write down your reasons for needing the loan and how you plan to repay it, as some lenders may ask for this information. Tip number 6, be honest about the application. Honesty is the best policy. Don't inflate your income or hide your debts. Lenders will verify this information and find any discrepancies that could get your application denied. Being upfront about your financial situation helps build trust and ensures you're only borrowing what you can realistically afford to repay. If you're unsure about any part of the application, ask the lender for clarification rather than just guessing. number 7, consider a co-signatory. If your credit isn't fantastic, consider getting a co-signer with good credit. This can significantly boost your chances of approval and might even get you a better interest rate. The co-signer is equally responsible for the loan, so it's important to choose someone who trusts you and understands the risks. Make sure you can meet the repayment terms to avoid straining your relationship with that co-signer. Tip number 8, read the fine print. Before signing anything, read the fine print. Understand all the terms and conditions, including fees, repayment terms, and penalties for any early repayment. Some loans have hidden fees, like organizational fees, repayment penalties, or late charges. Knowing these upfront can prevent nasty surprises down the road. If anything's unclear, ask the lender to explain it. Tip number 9, build a relationship with the bank or lender. Having that good relationship is good leverage. This might get you better terms as a loyal customer. Plus, if they already understand your financial situation, this can help speed up the process. Regularly communicate with your bank. Use their financial products to maintain good relationships. Tip number 10, apply for a pre-approval check to see if there's a chance or a way for your loan to get pre-approved. Getting pre-approved for a loan gives you a clearer picture of what you can afford and that you're serious. It's a win-win situation. Pre-approval involves a preliminary check of your credit and finances, giving you an idea of your borrowing capability and capacity and potential interest rates. This not only strengthens your negotiating position,
Oh yeah,
but also speeds up the final loan approval process. And there you have it, folks, the top 10 tips to help you secure that loan with the best possible terms. Remember, preparation and knowledge are key. Always seek professional financial advice if you possibly can, and question, do you really need the loan?
What were you thinking?
If you found this video helpful, please do give it a thumbs up, share it with your friends who you think might need it, and don't forget to subscribe to the Money Matters channel for more financial tips and tricks. That's it from me, Rob Glenn. Thank you for watching. Until next time, stay smart with your money.